So which policy has been historically most successful in avoiding these cycles and crises? The East Asian economic miracle, which is recognized by anyone really, even the orthodox economists, was due to bank credit creation being mainly used for productive purposes. This was done in Asia first by Japan. Japan introduced it into Manchuria, which is now part of China, Korea and Taiwan, which were part of Japan in those days. And those countries after 1945 then continued these policies because they saw that it's quite effective. China adopted this from 1982 when Deng Xiaoping traveled in Japan, and they explained to him how they had this high growth period. It was a system of credit guidance where the central bank tells the banks which sector to lend to or not to lend to. So in particular, it was forbidden to lend for unproductive purposes. So no consumer loans and also no asset loans. You could still get a mortgage, but it wouldn't be from a bank. It would be from special non-credit creating institutions. In other words, you have to use existing money for asset transactions, because then you don't get the negative results of using new money creation for asset transactions. And that worked really well, 10, 15, 20% growth for, several decades, and these countries just developed tremendously quickly. Obviously, they didn't look at environmental concerns, so that's something one can easily improve on. It wasn't a goal, but the same system of credit guidance can be used to achieve almost any result. As the Japanese central bank showed us, you can also use it to blow up the system and destroy those banks and the traditional Japanese economy, as they did in the 80s, when the Bank of Japan used the credit guidance to force the banks to increase speculative lending. Similar to how the ECB, of course, encouraged the Irish banks to expand property lending in Ireland. So remember, some people say, well, credit guidance, that's too much of an intervention. But remember, credit is always allocated. There's always a bureaucrat making allocation decision. This is what the banks are doing. It's only at the moment, nobody's ensuring or even trying to encourage them to do what could be more beneficial. And with a credit guidance system, you just make this very explicit. And obviously, it should be very transparent and accountable. The alternative is to take away the power to create money from banks and give it to the government, as Positive Money is advocating. But I would be very cautious about that, because central banks have an absolutely horrendous track record. Sadly, after any crisis, they increase their powers. And this has been true of the recent crisis. They're far too powerful and unaccountable. We should not give them any more power. The centralization of power needs to be countered. This has been a major trend in the last century. What we need is the opposite: decentralization, devolution of power, and that has to be especially true of the power to create and allocate money. So to think about how we can do that, the power to create money belongs to the people, as we heard at the outset, and it needs to be returned to them. And not just on paper, on the surface, but in reality. And this can be done in a few ways that I'll discuss in a minute, but it shouldn't be given to central bureaucracies. I've got a bit more on the East Asian miracle. We can return perhaps if you're interested in the Q&A. Now, the credit guidance is, however, not the only way to do this. In fact, if the credit guidance system is abused by the credit allocators, central ones, then that's also bad. And this is the risk with the centralization of power. And Japan is really a great warning concerning that. The Bank of Japan abused that power from the 1980s to cause tremendous damage to the Japanese people in order to further an agenda that came from the outside to change the economic structure and a structural transformation, deregulation, liberalization, privatization, a whole neoliberal agenda that's being pushed by central banks. So there is an alternative. It doesn't mean that we shouldn't introduce simple credit guidance in the form of just forbidding the harmful bank credit. We could always do that, and then you don't need an active credit guidance. You just say, well, no, banks can't lend for consumption or asset transactions, full stop. That's enough actually on this topic of credit guidance. But there's an alternative, and one should combine that. Germany was not directly implicated in this, or not very much affected, in fact, by the 2008 crisis. And you look at how closely bank credit and nominal GDP growth were in line. So during that period, the 2000s, you did not have an asset bubble. They're working very hard to create that now, but that's another story. So why was that the case? Well, it has to do with small and medium-sized enterprises. And you will have heard this German word Mittelstand, which is medium-sized enterprises, family firms. Why do they matter so much, these small and medium-sized enterprises, SMEs? They do have a big impact. In aggregate, their total investment, capital expenditure, in most countries will be 20%, 30% of the total, so that's substantial. But even more importantly, they're the main employer. In the UK, they account for 65% of employment, which is a low figure for an industrialized country. In most other industrialized countries, 70%. Japan, up to 80% of all employment is accounted for by small and medium-sized enterprises. And of course, they have a job multiplier. They create more jobs. So if you give 100,000 euros to a small firm, and you compare that to the effect on job creation, giving the same 100,000 to a multinational corporation, maybe also based in Ireland and Dublin, which one is going to create more jobs? Well, this is the trouble with scale. When things get too large, they lose the human connection, and therefore it's very important to support small-scale activities and small-scale enterprises. Now, small firms are entirely dependent on bank credit. They can't really get access to capital markets. There's lots of talk and PR about private equity funds, venture capital, and angels and all that, but it's really a drop in the ocean. They're still dependent mainly on banks for funding. So how can we ensure that banks will fund SMEs, as they should, clearly? Job creation, productive economy, less speculative lending, activities among small firms.